Hey, so Jay, I stopped making my mortgage payment. What do I do now?
It's a great question.
Hey, everybody. Welcome back to the show. I'm Brian.
I'm Jay.
And we are here talking forbearance today, aren't we, Jay?
Yes, we are.
Okay, I really didn't stop making my payments, but there are a lot of people that have been impacted by COVID and they've lost their jobs and have had to go into forbearance, Jay, haven't they?
Yes, they have. It's a great conversation to have because it's such a problem today.
Yeah. So here we are. We decided to devote this podcast to talking about forbearance, more specifically updates and how you get out of forbearance, because that's where I think a lot of people get stuck. They start the forbearance process, and then it can be
was very easy. It was easy to get into.
Super easy.
Yeah. So
Super
there
easy.
was really no qualifier to start your loan in forbearance.
Yeah. Yeah. I had a client actually call me and ask me to do a refinance. And when I asked him if he was in forbearance, he said, well, I'm really not sure if I'm in forbearance or not, but I did talk to my bank about it. And I said, okay, how did that conversation go? And he starts telling me about a few questions that they asked him, but they really didn't get too deep with it. And he thought that he left it off where he was just going to think about it and get back to him. And about 2 weeks later, he got a letter in the mail letting him know that he was on forbearance, a formal notice that he was in forbearance. And it was very easy for people to get into it based on the CARES Act. There weren't any.
And years ago, it was so different, right?
Right, in 2009.
Yeah, loan modifications and short sales and things like that. You had to really kind of income qualify to get these approved. So this is totally different.
Well, back in 2009, people actually had to prove that they had lost their job or that their income had fallen or that they were furloughed or whatever.
A real hardship. They had to document the hardship.
They had to document it.
Yeah.
This time around, you just had to call your lender and say forbearance, and I'd like to be on it. And they say.
So when did this start? When did this begin?
Well, back in March, right? So the world kind of locked down in it was early to mid-March, and Congress got to work right away on figuring out how to help all these people. That suddenly you had millions of people out of work in the hospitality industry and travel industry and all these affected people, and lenders of course started seeing that their payments were not coming in regularly, and so they got to work trying to help people manage through it.
So the CARES Act comes into play, right? And then how does that affect people and their ability to pay make their payment?
Well, so the CARES Act, the idea, and I get where they're coming from on this. They wanted to help people pause their payments, right? So it wasn't payment forgiveness. It wasn't like the money that you would be paying this month or next month and the next month would go away. But it was paused, and there was already confusion on that up front. I think a lot of people thought that it would just automatically get tacked onto the end, and we know it wasn't like that up front. They didn't come in till later and say, okay, we'll figure out a way to let you put it on the back instead of paying it all back at one time.
And I think there were so many stories and so many people that had friends that said, this is a great idea. We should do this. You should just call. Mm-hmm. All you have to do is make this phone call and ask for forbearance, and it's going to just be done.
Yeah.
So, we would ask our customers, we would get the phone calls about, hey, should I do this? This is what's going on. Mm-hmm. And a lot of times we're like, where did you hear about this from? Mm-hmm. Because at that time it was so early.
It was brand new.
It was new for everybody.
It wasn't public yet. Yeah. And I think a lot of people took advantage of the forbearance who didn't necessarily need to take advantage of the forbearance, and that's where the proving that you're actually in a hardship came along, because they made it really easy to get it. Oh, I don't have to make my payments for 3 months, and it's not going to affect my credit.
Sounds great.
Or it's just not going to affect me. I just get to have a payment holiday, and early on it didn't turn out that way. So they were 3 months at a time, I think was the original plan, reviewed every 3 months. But right up the top, at the very beginning of all of this, it was on the fourth month, you've got to pay 3 payments plus your current payment, 4 all at once. Well, I don't know about you, but if you've actually been out of work and you haven't been able to make your payment, how are you going to come up with 4 payments?
It's not realistic.
It's not realistic. So slowly but surely, they've been updating the rules and giving lenders a little bit more latitude in terms of how to manage. Okay, so now I'm at the end of my forbearance program.
And now what?
What now?
Yeah.
What now?
And this is pretty much where we're at right now, because as far as I know, at this point in time, where we're at on the timeline, we're approaching really like the third of the fourth
Yes.
set of being able to defer payments. And so at this point in time anyway, the latest point that we're going to be able to continue to defer payments is going to be probably April or so.
Okay.
It'll be the last round of it.
And then who knows what Congress might do with it at that point? Will they extend it longer and let people go longer? History tells us maybe. But it doesn't necessarily make that easier on people, because in the meantime, more and more of your
it's just adding up
payments
and adding up and
are adding
snowballing,
up.
really.
So as of today, here's I'm going to just kind of read the list, and then we'll just kind of go through one by one and talk
Sounds
about
good.
what it is. But here's the list of categories of what's next once you reach the end of your forbearance period. So reinstatement, forbearance extension, repayment plan, partial claim, which is just an FHA carve out, payment deferral, loan modification. So there's really 6 major what's next categories. And
so these companies would consider these workout options.
Right.
Like we're going to work this out together, and we're going to do the best that we can to make it so that it works for you.
Yeah.
Right. So if we get into restating a reinstatement on the mortgage, it's basically where you're going to have your deferred payments caught up.
Right.
So in a CARES Act forbearance, for example, you're not going to necessarily have any credit issues per se. And so just because the payments are deferred, it doesn't mean that you're late or they're reporting anything past due.
Right.
And so you have this ability to then reinstate your current mortgage account. And so all you're doing is taking those payments that haven't been made and basically make them all at once.
Right.
Yeah, make them all at once.
So reinstatement is you're paying back everything the payments that you have in play plus interest right at the end of your forbearance. That's what reinstatement
And how easy is that going to be for anybody that's struggling to do that?
Right. And as we're going to learn, when you get to some of these other ones like payment deferral and loan modification, it doesn't mean reinstatement, especially in terms of, can I go ahead and refinance? Can I qualify for another loan right now? There's implications.
So if they reinstate the loan, they can, right?
Yeah.
Immediately, they could refinance, or they could essentially go purchase another home and qualify.
Right. But here's another little caveat. So let's say you own more than one property. Let's say you have a primary home and you have an investment property, and you went in forbearance on your investment property, and you reinstated that investment property. You still have to wait a seasoning period, because it was an investment property, not your primary, to either buy another house or even refinance your primary that never even went into forbearance.
That is good to know.
There's a lot of little intricacies like that. If you reinstate your loan on your primary, no seasoning. But if you had an investment property and you reinstated it, there's still seasoning, because it's seen as a more risky type of property, and they want to make sure that you've proven that you can resume all those payments and everything.
Kind of makes sense.
If you don't reinstate your loan right away and you go on, you do forbearance extension, that's the next one, right? So if you decide not to reinstate it, now you can look at possibly extending the forbearance another 3 months. And like
so at this point, we
may only have another 3 months as far as we know.
At this point.
Yeah, at this point. That might not be an option 3 months from now when we reach the end of the original CARES Act time span. Repayment plan. So what's that all about?
So if they do a repayment plan, that they're basically just going to allow for the person to make a higher payment. So it's almost like an installment agreement on top of your existing mortgage payment.
So spreading it out over
theoretically, yes,
over time.
yes. So they may say, okay, you've got $12,000 of deferred payments, and we're going to allow you to break that up maybe over the next 5 years. And so we're going to have an installment agreement that's added on top of your existing principal and interest.
So is it consistent from lender to lender what time frame they'll let you spread that out over?
We don't know yet.
We don't know yet. Some of them we've heard 12 months, we've heard 6 months, we've heard a couple of years. those are the kind of things that Fannie Mae will say, yes, you can allow that, but we're going to give you latitude in terms of how long you might choose to let your borrowers pay it back. So you have to always check with your servicer on exactly what their repayment plan options are. They're not all going to be the same. Partial claim. So this is a new one. This one came out very recently on FHA loans.
So with an FHA loan, the FHA will actually allow in these types of circumstances a partial claim. And so because your loan is insured with the FHA, they would also allow for this partial claim against your FHA insurance policy, basically.
Okay, but what does that mean?
So what it means is that, so the amount, let's use that same $12,000 again. What the FHA would allow is then they'll allow you to take that $12,000 and actually create a second mortgage that's insured by the FHA, goes behind your existing first mortgage, and that's compliant with the FHA.
Okay. And of course it's a second lien, right? So if you go to refinance or you go to sell your house, it's now, that's going to be payable with.
It's a package, and now both loans have to be paid in full before the title can be transferred.
Yep. Payment deferral. So some of the agencies, like our investors like Fannie and Freddie, which really are the two largest ones out there still to date, they've set up these special programs to allow you to move payments to the end, which is different than a loan modification, right? It's not a note modification.
Correct.
Technically.
And the agency isn't necessarily going to underwrite that change. And so if you, let's say they're going to allow you to tack those missing payments onto the back of the loan, it isn't necessarily going to extend the loan for any greater period of time.
Right.
So the loan is still going to be due. Let's say if you had a 30-year fixed loan, the loan is still going to be due in 30 years. It's just that amount that's due is going to be added onto that principal balance at the end.
Right.
And so again, there's no issues with credit or reporting late payments because under the CARES Act, it's still current.
Or going through a loan modification, which is essentially a whole new underwrite, right? It's a whole new, evaluation of whether or not you can have the loan.
And I think that's really what we're going to see the most. I think at the end of all of this is it's going to be the payment deferral option, where those missing payments are essentially going to be added to the end of the loan.
Right, because let's say their policy is 6 months on a repayment plan. You can spread out. Let's say you've been in forbearance for 6 months, and now they say, okay, you can pay it back over 6 months. You're making 2 payments a month, right? And most people who have had this hardship aren't going to all of a sudden be in a position to make double a mortgage payment each month.
And I think that's why we're going to see longer. You're going to see longer terms when you're looking at those repayment plans or the installment plan version. I think you're going to see, anywhere from 2 to maybe even up to 5 years on those.
And which brings us to loan modification. And we've all heard of loan modifications before. They were a big deal back when the market collapsed back in 2008, 2009. A lot of people went through loan modifications. It's similar to a payment deferral, except it is a whole new qualification process.
It's really where the note is going to get modified, and that's really kind of at the heart of what it means, because they're going to change the terms of your existing note and modify probably even the first couple years of repayment on a note modification. We saw that a lot of times, going back 12, 13 years ago, where we saw the note modifications were a big thing back then. And a lot of those modifications we saw, they started with like a graduated or step payment type thing where you'd start with a really low interest rate and work your way back up to what your note rate was.
Right.
And so it was a big feature on those loan modifications. Right. So it'll be interesting to see if you're able to move forward with a real loan modification. Moving forward, it'll be interesting to see if we see those step payments and the step interest rates, where they start you at a lower rate and kind of work you back up to what your original note rate was.
And I kind of mentioned it earlier how there's reinstatement is kind of going back to the beginning here. Reinstatement is you've paid everything back. It's not the payments haven't been put on the end of the loan. It wasn't a repayment plan. You've paid it all back, and I guess technically it would be it'll be reinstated once you pay it back through the payment program. If you go through a payment program, can you refinance your house right away? Once you just at the beginning of that repayment program?
We don't know that yet.
We don't know that yet.
Yeah, we don't know that yet.
One of the things floating around again was having to make at least 3 or 4 payments to prove that you're able to make your mortgage payments.
Yeah.
Why would a lender make a loan to somebody who went through a hardship but hasn't really been able to prove yet, and maybe it's not their fault. I mean, this has been a really difficult thing for a lot of people, but
Sure has,
the payment program, again, it's not a full repayment, so the lenders are going to see it as, well, we still need to see a little bit of a history of payments made before we'll be able to refinance you, as opposed to if you just paid it all back, to prove that you actually had the ability to do that.
For sure.
Yeah. But definitely a hot topic, an important topic, affecting so many people out there still. And maybe we'll be back on the air with this in 3 months with an update in terms of what they're doing with it at that point.
For sure.
But I don't know if you guys figured this out or not, but we're mortgage guys, and we don't have all the answers, but we feel we've got a lot of great experience, and we can help guide. If there's any questions out there, definitely reach out to us. You can comment down below with questions and tell us your stories. We'd love to hear the stories, because we learn from that too.
For sure, absolutely.
We think we've seen a lot, but we haven't seen. We know every day.
The feedback is great.
Every day we find out we have. I thought we saw it all. Right?
Yes, that's right. I learn something new every day.
And the feedback is great on the podcast. I mean, we're having a lot of fun doing this, and we've heard from a lot of friends and people who've watched it and gotten a lot of great feedback on what we're doing. And
thank you for all the support and encouragement.
Another thing would be really great is to hear from you in terms of what you'd like for us to talk about. We think we have a lot of great ideas of what you might want to hear, but again, we don't have all the answers. And if there are some things you'd want to hear us topics, let us know.
Please do.
Be happy to maybe put it on the air. And we're also not opposed to having people on our show, I think, and interviewing people
in the near future.
Hearing stories and yeah. That'd be a lot of fun. Well, Jay, it was great. Enjoyed.
Brian, always.
Enjoyed our fairly brief chat here. We're trying not to be an hour long like a lot of these other podcasters. Give some good information, tell some funny stories maybe, and move on. But thanks for watching, and we'll catch you guys on the next episode. See ya.
Bye. Testing.
Yeah, you're good. Okay. Okay, okay.
Take it from the top. Let her rip.